This is our Forex blog, November 12th, 2013, and these are currency indexes, which let you see what each individual currency is doing. You can see the dollar as a chart. It's trending up before midnight. It forms kind of a double top up here, pulls back to the hourly. Normally you get a bounce off of it. It acts as support. It did not go up, and so when it breaks down right here, it's very likely to trend down. It's likely to find resistance here and go down again. When a currency does not go down that much and breaks back above the hourly and breaks out, you know that's likely to trend up, even though it's only for 10 minutes. So you can predict which currencies to buy and sell based on this. You can see the euro strong and the dollar strong. So the euro versus each other, the euro versus the dollar is likely to be pretty choppy. A much better buy, or I should say sell, is when the pound breaks from above to below its hourly moving average at 330 right here, and the dollar is trending up. So is the euro. So you want to sell the pound dollar at that time, or buy the euro pound. It's that simple. And as you can see, when the pound broke down somewhere around 3, you might want to sell this little rectangle pattern right here, and it fell from 59.40 all the way down to 55. Huge move. Let's take a look at the euro pound. Euro's strong, the pound's weak. Guess what? You want to buy the breakout, and if you're really aggressive trader, you might want to buy this little pullback right here. And anytime you risk a tiny amount like this and catch a bigger win than what you risk, you're going to make money as a trader. And there's really only two methods that we look for buys. When you know a currency's strong, the other one's weak, the ideal method is kind of wait for a little pullback like this, and then put your stop underneath the low. So your risk is a very tiny amount. And even in this instance right here, if you got out kind of when it started to go up again and pulled back, this is the previous high, it broke out and then came back down. You don't know if this is a false breaker right here, it's going to end. But you can see that win's bigger than a loss. And if you buy this little pullback right here, again with a super tiny risk, click the wrong thing here, and it goes up and kind of pulls back a little bit. Again, that small win is even bigger than that risk. And same thing here. Your risk, super tiny. Your win is very, even on these crappy little 5 to 8 pip moves, your wins are bigger than your losses. Here's another note that was weak, the Australian. And we know that the euro was very strong today. So you have a weak Australian, a very strong euro. And as you can see, quite a few profitable trades. Small win here, flag pattern, small win, pullback, small win, flag pattern breakout, decent win. And whether you're a short-term trader or a longer-term trader, it doesn't matter. You can use these tools on any time frame you want. If you want to see what the dollar's doing on hourly chart, type in 60, hit enter, and you can see hourly chart of just the dollar. And you can use the same methodology to find longer term trades as well. Now I have the bands on here, but you can clearly see the dollar broke out Friday, made new highs, went sideways, broke out, came down to the lower bands. So it's clearly in the longer term uptrend. At 9 o'clock, it's a great one to be buying. Let's just bring up the pound that we know that was weak today. Pound dollar is very high probability sell at 9 o'clock and after, because the dollar is likely to get a bounce. This first trade wasn't very profitable. The second trade was. And the whole key to trading is small losses, bigger wins. Let's take a look at the pound on a longer time frame chart. And you can have multiple currency indexes up. Let's type in 60 here for the pound. You can see this one was in an uptrend, and today it broke down around 3 o'clock. It made new lows.